and forth between here and 250, between 2 and 3.5 as well. So we may have a little bit of adjustment down the road, but as things stand right now, I think this looks relatively good. Let's go ahead and let's make that $4. And let's make this one 1 even. Okay, so pretty straightforward. You can see that the market shot straight up in the air and then gave back the gains, and now looks like it's trying to go to the upside. It clearly has shown itself to try to rally. You could even make an argument that we have formed higher lows, 2 higher lows, and 2 higher highs, so that is an uptrend in and of itself. So let's go ahead and flip over to the daily chart. Again, this to me looks like a market that is trying to rally. Let's put some Bollinger Bands on this to try to get a grasp on the volatility and the overbought, oversold conditions. Notice how in the latest trading, it has definitely respected not only the 20 SMA, but it's also respected the Bollinger Bands when we get a little too overdone. Especially underneath here, we broke down and it turned around as well. A couple of shooting stars. That's the first really kind of dead giveaway for me that we could be running a little bit of trouble. We break above an area that's been resisted. We form 2 shooting stars in a row. That being outside of the Bollinger Band, I think that all lines up for a potential sell. Once you get below that level, we come back, we even retest it and fail again. So at that point, there isn't a whole lot more to ask. Out of the market, you just put your stop loss on the other side of these candlesticks. You probably aim for, I'd say, support here at 180. You do hit it eventually. It was a little bit of a bumpy ride down there, but clearly that would have worked. Let's do some moving averages. So we'll do the 50 and the 200. Notice that we broke above the 200 very shortly, or very suddenly turned around to fall apart, and the moving average here, let's see, this is the 9, so there we go. Let's make that the 50. Let's make this red. There we go. So you can see the 50 kind of going sideways, but notice how, let me hide the Bollinger Band. Notice how the 200-day EMA was respected. Now, as we have broken higher, we have just done the golden cross, so that might be something worth paying attention to. Nonetheless, on the breakdown here, another thing that you would add to that trade is at the 38.2 Fibonacci retracement level that we failed from the move lower. So that is yet another reason to think, maybe it's time to sell. It certainly worked out quite nicely. Let's take a look at volume. So you can see volume is stronger here. That's what you want to see. This is kind of a nice little example of accumulation. You want to see volume rallying, prices falling, volume stays very consistent. We chop around, and then eventually we break out on this high volume candle here above 180, which was obvious resistance. You could put your stop loss under the last swing low here. And what would you aim for? Well, you would aim for this previous support, which should now be resistance. It was, at least that day, we did break above there. But that was a nice, tidy little target. The volume was strong on both of these days, so really nothing to be overly concerned about. When you look at this chart, you can also see, well, here's an example of an ascending triangle right there that we broke out of on high volume. So that's exactly what you want to see. That was your target, and we hit that almost immediately. So nice little move, stop loss on the other side of the triangle, and you're ready to go. We hide these moving averages. And I'll even hide the volume here for a second so we can just look at pure price patterns. Little bit of asymmetric triangle here as well. What's your target? Well, you measure from the high to the low. That's basically that. And you can see we got that pretty quickly. So that's pretty straightforward. Notice how we just fell off of a shelf here. Some people even call it that. There's just kind of like this support area. Everything's going quiet, 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 and then you just break down. That is a sign to sell. Put a stop loss on the other side as far as a target is concerned. At that point, in all honesty, you really didn't have a whole lot to work with back here on this chart. So at that point, you begin to look for candlestick patterns that tell you that maybe you're in trouble as far as, will it go lower? This hammer right here is the ultimate sign, but you can see hammer there, hammer there, hammer there. So you had plenty of signs that, hey, maybe they're going to fight here. Nice little trade, about 87-ish cents that you could get on it. And as you can see, Tezos is very erratic. So you have to be willing to put up with a lot of volatility. That's another thing I probably should point out here is that know the crypto that you're dealing with, because some crypto is much more volatile than others. Tezos, for example, is much more volatile than Ripple. Bitcoin, it's not even necessarily that it's so much more volatile than some of the other ones. It's the fact that it's so expensive. As I record this, Bitcoin's $46-ish thousand. So a 1% move there is going to be much more expensive than a 1% move, if you own an entire coin here, obviously. So that's something to keep in mind as well. Obviously, you need to position your size for that particular trade. At this point, if you were to get long of this market, so here is, it's not really a candlestick formation or anything that we had talked about previously, but these are the type of things you need to look for. Well, notice that we have failed on the daily chart to break above these two wicks. And if you extrapolate it out, you can see that there was a little bit of resistance there previously and there. So what happens if you get a candlestick that closes above there? Well, then it's a buy signal, and you start to look for each one of these areas over here as potential targets. Then you have to ask yourself, well, where do I put the stop loss? Really, at this point, I probably would have to drill down to a shorter time frame, because if you put your stop loss on the other side of the candle, your risk to reward just isn't there. You might be risking, in this case, something like 50 cents to pick up 10. Well, that doesn't make any sense. You want to make a bigger move. So then you drill down to maybe something like a half an hour chart. Well, at this point, there's your high. So if you can break above there and you can put your stop loss here at 320, get in at 341, then you can start talking about 360, 380. It becomes much more palatable. Just something to keep in mind. Now, having said that, this is not a marketplace that's very easy to trade short term because it does chop around so much. So make sure you keep in mind that, what's its average move like. Something like Bitcoin's a little easier to trade because it may move $1,000 in an hour. This has such a micro movement and a lot of wicks. So it kind of tends to make itself more of a swing trade, which is when you're buying the swing higher, the swing low, you're selling, up here, buying down here kind of thing, hanging on a little longer. Even though it might only be 7 or 8 cents, it tends to lend itself a little bit more towards that type of trading. So certainly you want to be aware of the